Welcome to Smoke and Mirrors, the podcast where we make sense of agricultural policy. Today, I'm excited to be joined by Dr. Youwei Yang, who is the chief economist for Soleil. Youwei, thank you so much for joining us. It's good to see you again. Do you mind introducing yourself and the work you do?
Thank you, Professor Ift. It's nice to be here and great opportunity to discuss crypto and a few topics that you might be interested in. Myself, I've been involved in finance for almost 10 years now, but the crypto journey has really started while I was at Cornell and looking to crypto research on my dissertation. And after that, I'm mostly in the financial institution working on digital assets, i.e. crypto trading. And right now at a crypto mining facility firm. We have several locations that mine Bitcoin and Litecoin, Doge, and I head up the financial revenue management, risk management, and a little bit trading over Soleil.
A lot of policy issues, regulatory issues around crypto right now, but I really want to start this off just covering the basics. So maybe we can start off with you explaining what cryptocurrency is, and don't be worried about talking down to me. Like I'm 10 is just fine.
Sure, sure. It's always great to start with scratch that stablecoin or crypto coins, they're all digital currency that sits on blockchain. And the blockchain has another name, it's called distributed ledger technology, so DLT. As its name, it basically means it has a distributed accounting or recording system as a ledger, similar to what we have in traditional finance. We use a book to record the accounting transactions and all the financial related transactions. Blockchain does that for a lot of things, not only for cryptocurrency, but also for data transactions or agriculture supply chain, you name it. So it can cover most of the records keeping, and it's distributed, stored on the network, meaning that if one server is down, the rest 99 servers or whatever servers are still active. So it prevents the single point of failure. So if somebody is doing bad things, kind of corrupting or making edits to the real records, the rest of the validator or the nodes will be able to still keep the accurate information for the system. And Bitcoin or cryptocurrencies or stablecoins are all sits on the blockchain that transact on those distributed ledgers. And just like we have Venmo or PayPal or Zelle, their digital currency sits on the traditional financial system by the banks and the IT infrastructure. Crypto is a digital currency that sits on blockchain. So that's the major difference or the upside.
So it's a digital currency that sits on the blockchain.
Yes.
Okay. So maybe let's, like, if we think of currencies, the dollar, the pound, maybe like all these different currencies, how should we think about it in relation to traditional currencies?
Right. So the dollar or other fiat currencies, their inflation system is based on central banks, whether it's Federal Reserve or ECB or other central banks.
Mm-hmm.
But Bitcoin's monetary system is based on the white paper that Satoshi Nakamoto has released in 2008. And the structure is we have limited total supply. So the total supply is 21 million Bitcoins. Like I said, I'm running the mining facility. So we calculate the different problems and then getting rewarded by Bitcoin. So those new Bitcoins are created real time. So the speed of increasing that money supply is decreasing. By all means, the supply is increasing, but at a decreasing speed. So it is an inflationary model, but at a deflationary speed. So the system has been set at that schedule. Currently, we have mined 20 million out of 21 million. So we only have 1 million Bitcoins left to mine or to be created.
How are currencies mined? I mean, I think gold is like an original currency. I can think of gold mining. How do you mine or create a cryptocurrency?
Right. There's cryptographic hash functions. So if I transact money to you or whoever, the information gets stored on that blockchain, that one block, and the block has been consistently adding up. And in order to adding up those blocks, there are certain ways to encrypt those information. Other people cannot see this is from Youwei to Professor If. It's probably from XYZ to ABC, but only you and me knows who's XYZ and ABC. Otherwise, other people won't know. There's a way to encrypt that information. So the people who encrypt and decrypt those information get rewarded by the newly created blockchains rewards. So per block, so right now we're adding one block per 10 minutes roughly, and those 10 minutes will be rewarding roughly 3.125 Bitcoins. So people who solve those problems, whether it's encrypting or decrypting, will get rewarded after the block has been confirmed by the whole block, whole blockchain ecosystem, and then will get rewarded by 3.125 Bitcoins.
This information exists in the blockchain.
Mm-hmm.
One block every 10 minutes. And somebody has to go in and what was the word you used?
Mine or
Mine it.
encrypt? Yes.
Yeah. What does that mean?
So there's it's basically a math function. We have random number and the SHA 256. So it's a one-way encryption. So like I said, you to Professor Ift, say $10. So that will be encrypted to 64 digits password basically, and that information will be recorded on the chain, and then a random number will be created or attached to that as a timestamp, since random number will be the timestamp on that information.
Okay. So you're guessing, it's not guessing, but you're finding a random number that's attached to that
Yes,
blockchain.
it is somewhat guessing. Yes, right, you're right.
Okay. Yeah. There's probably more sophisticated. But okay,
Yeah.
so let's go back go back to like macroeconomics 101.
Hmm.
What are the key characteristics of a currency are that it has to be rare.
Yes.
And the second one, you have to be able to exchange it. Is that,
Yes.
am I
You know,
remembering this correctly?
yes.
I didn't do
Yes,
my
you're right.
homework. Okay. So I guess that's the rare part of cryptocurrencies, say Bitcoin, is that the total number is limited. That, okay. And the exchange part, that's the blockchain.
Yes, people can
That
transact. Yes.
you're able to transact it. Okay.
The third part is the store value.
So yeah, okay.
That's the most trigger part, cryptocurrency compared to other currencies, because Bitcoin price move up and down quite a bit. So that's the most challenging question for crypto community, that it's not so much as a currency, since it doesn't hold the value. Maybe you buy one car using Bitcoin today. Today maybe a Mercedes, next day maybe a Lamborghini or whatever. So that worth different things.
Okay. So that it's very volatile right now. Is that what you're
Right. Right.
saying? Okay. And so I mean if you look back at national, I mean some countries have hyperinflation and that's considered a big macroeconomic problem. I mean the value of gold goes up and down over time. This is more volatile or than that even?
Yes, more volatile than most assets,
Okay.
than SP 500, Nasdaq 100, or gold or silver. Actually, last few months has been less volatile than silver.
It seems kind of arbitrary, but if I think about, say, mining for anything like oil or gold, there's like, you get lucky. You find it on your land. Like you think of the gold rush in the United States. If I want to mine crypto, what do I have to do? What's required?
It's mostly power and the server. So power, electricity, and the server is the computer that solves that particular problem that I just mentioned to encrypt and decrypt. And you can actually run a miner at home, but it just won't be economical, since industrial power is much cheaper than home power.
Okay.
So it outbids.
Is there any special sort of knowledge or skill that's required, or is it really just about access to the most power?
The knowledge required is mostly at the network and the solving problem, but the system the server will solve itself. We just need to set it up. Just like computer, we need to set that up as well. Once we set it up, it will be automatically running. But maybe the power is down, or the system is down, or the internet is down. We need to maintain as well. But generally speaking, it should be able to set up easily.
Is the gold rush a fair comparison with these miners? Is there like
I
How can we think about this?
Yes, people generally say that Bitcoin is a digital gold because of the reason of the mining and the limited supply, and it has some feature of currency, but it's not really at all. So not totally the currency as neither. So similar to gold, people might use gold to transfer value. People use Bitcoin to transfer value as well. The most impressive quote I heard is think about moving 1 billion of US dollar cross the border, or $1 billion worth of gold cross the border versus $1 billion worth of Bitcoin cross the border. Yeah.
Yeah.
So crypto will be the most easiest one.
So I guess another thing, when I think of currencies, there's always a government
Hmm.
involved and a central bank, and stability. If you do it right, stability is really important part of that, and sort of that's how our economies work. Well, like so when you think about crypto, Bitcoin, who owns it, and how do we think about that
Right.
relationship?
Yeah, I heard your curiosity. It's basically a little bit background to share. The white paper of Bitcoin was released after 2008 financial crisis.
Yeah.
And the core narrative was saying that the traditional centralized banks or Federal Reserve or banking system are not doing their job uh, correctly or ethically. So, and in the inventor of Bitcoin, basically Satoshi Nakamoto, somebody is saying it's one person, but maybe say it's 4-person group. So it's still anonymous. So people still don't know who Satoshi is. There's a lot of guesses, but nothing has been confirmed. So this group or person has defined this decentralized or distributed system. So basically, it's peer-to-peer. All participants are tracking and validating everything. There may be redundant computing power. There's problems to resolve that, but the philosophy is that not only one person or a few person can determine the financial system in US or in globally, or only 10 people can determine that. It's mostly that all the community members on this blockchain can have an influence, can have a power, can have a voice.
I guess I haven't asked how you keep is 2008 the beginning?
Yes,
Okay, and the beginning was this idea that was
yes,
introduced by some people that we're not quite sure who they are. They put out this paper, this idea. Is that
yes, right.
okay? Then what happened next?
Then, so the paper was released probably October 2008, and then first Bitcoin was created on January 2009.
Who did
So,
that?
Satoshi.
Okay, situation.
Yeah. Like I said, nobody knows.
This is okay. Okay, okay.
Yes.
Okay, so January '09.
Yes. So that's when the first Bitcoin has been created, based on the white paper he released, or he or she or they released.
Okay, okay. And can you kind of walk us through what's happened since 2009? What's been the
Yes.
evolution of the industry?
Yes. So between 2009, 2013, 12-ish, it's mostly in the developer communities, not really public um, people knows. So it's mostly the geeks, the developers who are very tech savvy and very kind of just using their bare time and bare computing power to mine Bitcoin or other cryptocurrency. So that 3-4 years has been mostly in that community. And the price has moved up since mostly in 2012-ish and attracted media attention. And that becomes more into some tech community, some more general tech community, and some financial community who are interested in this currency or asset. And the reason for that hype was mostly based on actually criminal things, bad things, money laundering, drugs, human trafficking, whatever bad things, since it's an easy way to be anonymous. But it turns out to be those people who did bad things has been caught as well. And then the reason being they actually use their address, so basically their account address,
Mm-hmm.
converted to US dollar or other currencies. So as long as they are off chain, so if they're on chain, nobody will know who they are. But if I tell you my numbers, whatever, and then you see on public, oh, this number, you will connect it to me. So this happened to many criminals who were not clearly managing their private keys and got caught, and then had several major justice involved, and that kind of caused a couple years of drawdowns for the community. Yeah, and then becomes less criminal activities and become more financials. In 2016-17, we have smart contracts being invented by
Okay.
Vitalik.
By
Now
who?
it's Vitalik Buterin. Now it's the second largest blockchain, Ethereum. So what he has been done is the chain runs faster, and also you can develop apps on that chain. So basically, similar to our computer system, you can have different apps or different software on it. So that chain allows others to develop apps on the blockchain, can do transactions, trading, auctions, whatever. So that has been another boom for the community, and it's called the smart contracts era. And obviously some macro and community things happen as well. China has banned cryptos in 2017. It was a major crash over the price, and since it used to be Russia, US, and China has been the top three players, and China has been kind of eliminating that presence more and more. 2017 was a major year that a lot of people are we call ICO, so initial coin offering. Basically, you can issue a coin on that Ethereum blockchain and then raise funds, and then the valuation of that project can be hundred millions or $1 billion with no reason. Maybe just PPT deck presentation, without anything. Basically, it's an illegal fundraising process that caused Chinese government to be very concerned, and also U.S. government. That has attracted government attention and the scrutiny. After that has been, and also 2018 has a global macro a little bit drawdown as well, so that continued that crash or activity. And 2019, 2020 has become more, we call DeFi summer. Basically, you can use blockchain apps to save funds, make a loan, and it's similar to P2P lending, and P2P transactions. So a lot of activity uh, has been existed since that. After that, we've seen some institutional involvement. So I think BlackRock and a few other Fidelity and a few other major financial institutions has joined the force in that time, like 2020, 2021, working on ETFs and all those. And it's finally approved in 2024. It takes years, but that's when financial institutions got involved. And now with Trump administration, and we have strategic reserve and all that, so government got involved as well. So that's kind of basically a 17-year of history in 5 minutes.
Can you bring us back to sort of where the industry is right now?
Yeah. So right now, most of the attention is on stablecoins.
What's a
A few
stablecoin
reasons. Yes.
again?
Yes. The reason being the DeFi is still active, but it's insecure in some sense. So if you recall, there's FTX or a few other bankruptcy in 2022. They are somewhat related to DeFi because it's high leverage. The core philosophy is they give high yields to people who deposit their funds, and then they will invest somewhere else and then do more aggressive trading. And then they lost funds, cannot pay their clients back, and then
Yeah.
they run out to other countries or just escape. So that caused the major crash in 2022. I think the industry has not been recovered from that yet. At least not fully recovered. Recover some, but not fully. And that has some policy implications as well, because SEC and a few other regulators has been really chasing them down to see what has happened, where money has gone. Also, FINRA got involved as well. Department of Justice got involved as well. So I
Yeah.
think those cases, most of cases has been settled right now, but it still has some remaining cases that prevents DeFi ecosystem to be prospering. And stablecoin has become a major part because we have Genius Act, and that passed and will be active early 2027. So right now it's in the final details. Major kind of debate is on the yield, taking yield or the interest rate. interest rewards. So basically, right now, if we are depositing or saving funds at a bank, we get almost nothing in interest unless we're buying CDs or premium deposits or whatever. But general savings won't have interest. And the banks will use that money to buy treasury yields and they will make money on it. So they
Right.
take that interest rate
Yep.
spread.
Yep.
But stablecoins generally has been offering most of the interest to the users, and banks don't like it. So there's a very intense debate between traditional financed banks and crypto stablecoin issuers, primarily on this interest rewards payment to users.
Okay. Can you recap the Genius Act?
The Genius Act was passed May of 2025. It was allowed roughly 18 months to fully kind of the details. So back then was only the general structures, but now it's working on the details. And interest is a major detail that's still in the debate.
Okay.
Second part is AI has becoming a major force of stablecoin as well, because AI is usually connected to API and to agent to different servers, and those servers will require a key or a password or tokens, and it's very naturally being integrated with stablecoins better than traditional financial methods.
I wanna go back to a couple things. One is you talked about the role of currencies, the role of a central bank, and this idea in this white paper that should be distributed. Could you explain that a little bit more?
Yeah, the distribution is not only from the philosophy itself, but the goal is making it become a global currency. So we are lucky to be in rather stable countries. Inflation is relatively managed, but in certain countries, inflation is like 100%.
Yeah, absolutely.
So those countries' currency is less stable than cryptocurrency actually. Even though Bitcoin roughly has 20-30% volatility, but their currency has like 100% volatility. So when they will pick Bitcoin or stablecoin rather than their local currency, especially the young generation. It happens a lot in South America, Africa, and somewhere East Asia as well.
Has any country got rid of their currency yet?
I wouldn't say get rid of. I mean, still there's a large
Replaced?
generation. I would say I've seen countries that replaced 10-20%. That's a relatively fair number to put.
Okay. All right. The other, we've touched on sort of criminal involvement, and criminals are everywhere, and the regulatory framework. What's the sort of status right now? I mean, you talked about money laundering and these other bad things before, and then you talked about sort of this unregulated space where there's bankruptcies. Can you kind of bring us back to where things are now and the status of all that and how it compares to current systems?
What has been mostly sued for was that unregistered securities, because SEC will define raising capital by a team who develops a product or platform that will grow in value is called a security. So basically, many cryptocurrency projects. So besides Bitcoin, Ethereum, there are other cryptocurrencies, thousands of them. So they are raising funds, which is prevented by US SEC mostly. What recent development has been trying to define some cryptocurrency as commodities rather than securities. Yeah, so because Bitcoin has been mined using electricity and
Yeah.
server, which are all commodities. So using commodities to create another thing is also a commodity.
Right.
So that's the philosophy why CFTC is involved now to manage or regulate some of the currency that fits this criteria. But
Okay.
SEC is still active in managing other cryptocurrencies that don't have a physical commodity perspective, but they're rather in develop some software or platform to raise funds. So those will be managed by SEC. So that's kind of the general kind of framework we have facing right now.
If you're raising funds for a security, you're going to go through the SEC, Security and Exchange Commission.
Yes.
But some cryptocurrencies like Bitcoin, and there's several others, are now being treated as a commodity. And so
Yes.
they would be regulated by the CFTC. Oh gosh, Commodity Futures Trading Commission. Did I get that right?
Yeah, that's
I
right.
feel like I'm
And
always
I
doing an
got a name
acronym
for
quiz.
Yes.
It's like,
And I got the name for Genius Act if you need it. It's guiding and
let's
establishing. So it's guiding and establishing national innovation for U.S. Stablecoin Act. Guiding and establishing.
was that a party line or was that,
It's S 1582 Genius Act,
let's look that up.
119th Congress.
Okay. Let's see. That was that a I feel like I should have known. There's a lot going on right now.
Yeah, it's S 1582 Genius Act.
Okay, let's see. Okay. Oh, strong bipartisan support.
Yes, 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 it
Okay.
is.
Oh yeah. It was said it was 68 to 30 in the Senate.
Mm-hmm.
Yeah, getting 68% of Americans to agree on something. Any group. I guess you could. Yeah, that's definitely party. Guiding and establishing national innovation for U.S. stable coins.
Yes.
So stable coins is sort of what? Is there a limited number of stable coins? Or are we going to see more
No.
being created?
So the value of stablecoin is pegged to fiat currency.
Okay.
So mostly it's US dollar.
Okay.
Because right now the global circulation of stablecoins, 97% are US dollar. And they're like 2% in euros and a few other percent in Chinese or Hong Kong or whatever other
So they're
currencies.
pegged to the U.S. dollar.
Yes. How they do it is, so if you open an account and then you save $1,000 on account, and then they will basically invest your $1,000 into a treasury yield, and then they will issue $1,000 of stablecoins on blockchain to your wallet, so you can use across the globe. And then so that's called minting. So minting is creating. And once you don't want the stablecoins anymore, and you want to say, I want my fiat currency back, I want my US dollar back, you do a withdrawal. So they will sell the treasury yield they bought, and then give you the yields, 3%, 2.5%, whatever. And then they redeem, so basically destroying those supply in the circulation. So that's this process. And what Genius Act was mostly regulating for is how much you can invest in. So used to be there's no rule of once you have the dollar, you can invest in real estate, even buy cars, buy houses, all those things. And there's not much regulation. But
Okay.
current Genius Act was mostly to regulate you have to buy at least 80% of highly liquid qualified funds, i.e. short-term treasury yields, treasury bills, or equivalent repos, and those fixed income products.
So it added a lot of stability,
Yes,
security to
right.
trading. Okay. Okay. That is very helpful. So, I mean, yeah, there's a lot to absorb here for sure. I think some people have been active in this space. Some people are new. And, my audience is sort of a, broad group of people that work in food and agriculture. So, if you're trying to learn about this space, like, what do you think are key things people should know and try to understand, or resources that they should be using?
Sure. Actually, I forgot to introduce, I actually had a agriculture background as well myself.
Yes.
Was participating in the agriculture commodities trading and research in my early career. And so
And
I
you
kind
worked
of,
on a feedlot in Western Kansas.
yes, I did.
Nothing like that.
In Utah, Kansas. Yeah, in the middle of nowhere. But I had a good time. Quite a bit, trading
Excellent.
and hedging cattle and corn futures. So that's my first feet on the ground in the derivatives space. By all means, I do have the kind of connection in agriculture and agricultural commodities and farming in general, converted to general finance and data finance. So I think my little bit understanding to share is I started being a criticism of crypto as well. I was obviously came from traditional economic background and questioning why it's so volatile can be considered as currency. And later on, I realized that it's not the price or the bubble it's driving the innovation. It's mostly the infrastructure. So it's similar to what we have in the banking system. We have ACH, SWIFT, all different alliances. So those infrastructure worth something, right? And even for Amazon or Google, they have their ecosystem. They have a network as well for the clients or users. And that network infrastructure itself is the fundamental value of anything. Same for crypto. I mean, you can judge some infrastructure is no use, right? So there's plenty of them. But I think understanding the major ones, there is a use in that neighborhood of fundamental value. So, when we think about the fundamental value of Bitcoin, I think that's the major thing. And another thing is it converted from energy to financial assets. So it's a way of storing redundant or cheap energy into some sort of financial asset or infrastructure. So that's another piece of fundamental value. So I think that's the most important thing I've learned become from criticism to be a advocate is that there is a value. So the stable coins also has been using Ethereum blockchain, Lana blockchain, Tron blockchain, a few other blockchains because the speed, so they can deliver international funds in seconds or minutes compared to traditional banks in several days, which also requires high fees. And for
Yeah.
stablecoins, only like 5 cents.
So
Yeah,
if
so I think,
somebody,
yeah,
where do you start if you want to learn more and be educated enough?
I think understanding the commodity piece of crypto will be the kind of natural connection for people in agriculture and farming. And since we'll easier to understand commodity standpoint and from physical products that converted to a digital products. So I think that's a beginning.
Okay.
Yeah. May I pause? I can bring my book.
Yeah. I mean, like online resources, like just like where
Yes.
do you kind of get it like enough knowledge, and if you're gonna make an investment or use, like how do you like get to that point? I guess that's kind of.
Yes.
You have a
So
book?
yes, I have a book. I bring, I
Show us
know.
the book.
So this is my book.
Okay. Blockchain, the New Economy, and the Self-Sovereign Internet.
Yes.
All right.
So this is a book that we wrote for basically explaining, I just mentioned the basic Bitcoin and also smart contracts and DeFi
Hmm.
and a few other sectors and stablecoins over the sector. But this book is rather lengthy, I guess,
Yeah.
but it's good for people who are interested in diving deeper. But there's a lot of online resources, free and educational Bitcoin
Hmm.
101s or Bitcoin Academy. So they have
Hmm.
videos and also articles to introduce. Besides what I just mentioned, the fundamental value, there's the details of encryption, decryption, and hash rate, and all the computing and smart contracts developers. Those details are on the communities as well.
The other thing, I mean, when I think of, like, for me, the commodity comparison is probably the most useful. But when I think of commodity trade, well, first of all, there's hedging, right? And if you do that
Yes,
right, it's an like commodity hedging. That's understood. It's a way that the producers can manage price risk. If you get outside of that, though, commodity trading is risky, and it's not something that
yes,
you do that one does casually, or you're going to get burnt sooner or later.
yes.
Is that the same? Is that the reasonable way to think about crypto, to think about stable coin? And it sounds like there's other uses, but is that a fair starting point?
Yes, a little bit background. The way I started Bitcoin, looking into Bitcoin, is because CME launched Bitcoin futures in
Okay.
2017.
Okay.
And because I was a commodity futures guy, and attracts my and Professor Turvis' attention, and
Yeah.
a few
Right.
other mentors at Cornell.
Right.
So we did look into the futures perspective, because the futures was not trading actively. So we're basically looking into why the design was not as active
Yeah.
or liquid. So
Right.
that's my kind of initial
Mhm.
understanding, and then I basically expanded from futures to spot, so the Bitcoin itself. My current firm, because we mine Bitcoin, we produce Bitcoin. So basically, just like we produce corn or we have cattle, whatever, physical commodities. So we need to hedge the risk, and we use futures options to do it. So there's an industry for this, similar to
Yeah.
agriculture as well.
So, in the future, I want to explore data centers more. I want to explore the Clarity Act, which is more for Congress. Are there any other topics that you think would be worth kind of a deeper dive?
I think that's good enough for,
Okay. Okay.
yeah.
All right. And if you could think about sort of the industry in your work now, like what do you think's let's start with what do you think sort of the biggest threat? And then what do you think the like what's the best outcome or the greatest opportunity as well?
I think AI is certainly the biggest threat and also opportunity
Mhm. Okay.
because AI can write an app in
Mhm.
minutes or hours
Right.
compared to before, like I mentioned,
Yeah.
writing a app on smart contracts takes several months or a year.
Right.
So that has definitely reduced the speed to the markets.
It
But
makes
same time, like I said, AI has been using blockchain quite a bit because the native API connection is very naturally synced, naturally integrated to the payment system. So that kind of reviews AI can be threat to some startups,
Mhm.
but it's very helpful for payment infrastructure.
Infrastructure, that's where the value is, right?
Yes, yeah.
Everyone is probably is quite appropriate here. What do you think's like what one aspect of your work that's commonly misunderstood that you'd like to address?
Yeah, I would say that people still have the perception or stereotype that crypto is criminal. I
Mhm.
think I mean, in US is fine, but in other countries, because they are actually using some for criminal, but so the perception will still be a little bit negative. So that's one thing. I think the industry has evolved less
Mhm.
and less criminal activities. I think there was a report saying 16-ish, there was like about 40% of activity was in criminal, but by 2020, there's only like 10-15%. So
Okay.
I think more and more we develop, it's more become regulated and safe and non-criminal. So I think that's
Okay.
one part that people.
Okay. Okay. And then, yeah, it sounds like regulation has been a big part of establishing the industry.
Yes.
And that fits into the final question that I ask everybody. You get to change one policy. What would it be?
Definitely supports Genius Act of their interest rewards. I find that's been very helpful. We're passively involved in treasury bills and other than banks taking that away from us. So I'm a true believer of the yields, a financial risk-free rate should be distributed to the user self.
Very good. Well, thank you so much for joining us. I think this is hopefully the start of many conversations on this topic, and it's a great way to get a good foundation. So thanks so much for your time.